The metaverse is emerging as the next big technology platform and promises to be the next frontier for human experiences on the internet. Into the Metaverse covers companies, technologies, and trends that are bringing these promises to life. Join creator and host Jonathan Ross-Friedman, founder and CEO of Super Social, as he interviews the brilliant minds that are building, shaping, and investing in the metaverse.
Welcome to another episode of Into the Metaverse. In this episode, Yon and I will break down 4 news items from the past week or so that we think are influential to the development of the metaverse. We'll provide our insights and analysis of these items given our unique expertise. If there's any topics you'd like us to consider for future episodes, including short news items or topics you'd like us to do a deeper dive on, please let us know in the comments. And as I said last week also, we published a survey on our Substack a few weeks ago, looking for your feedback on what we can do better. Please check that out. We'll include that in the show notes as well. But please let us know what we can do better to get you the information you want. So moving into our topics for discussion today, we're going to cover 4 key items. We're going to cover Nvidia's earnings. It's obviously the most important company in the world right now, but it also has a lot to do with the metaverse and what's going on the infrastructure, but also the software side. We're going to cover the leadership changes at Unity that have occurred over the last few weeks. I think this is really interesting. We're going to go back to Roblox's earnings, as Jan wasn't able to join us last week. We want to get his perspective on what came out. And then lastly, we're going to dive a bit deeper into brand activations on Roblox and some key findings we found that we published on our Substack. So getting right into it, with Nvidia earnings, Nvidia shares popped to a new record high after the company reported another record quarter, and they expect revenue to climb even further in the quarter ending July to $28 billion. Adjusted earnings per share tallied $6.12 on revenue of $26 billion in the quarter ending April. Those are jumps of only small numbers of 461% and 262% year over year, respectively. Those beat analyst estimates, and the company also, for reference, the $25-ish billion, the $26 billion of revenue they posted in the quarter is up from $7.2 billion last year, just to put it in perspective without the growth rates. As I mentioned, their guidance for the quarter is also very strong. They're guiding to $28 billion. Consensus sell-side estimates were $26.6 billion for the July quarter. But the buy-side whisper number was closer to 28, so they came in kind of in line with those expectations. And lastly, they have a new product cycle that's about to ramp up. Their Blackwell B100 chips are coming later this year, and the management team suggested they're already seeing very strong demand for these chips. Before we go too deep into Jan, what's kind of your take on NVIDIA's positioning, both as a stalwart for global technology, the AI boom, but also what it means for the metaverse here?
Yeah, I think that I don't want to get into too much detail on like the earnings and the financial elements and all of that. I think we are really witnessing something remarkable with a company that single-handedly is basically ushering a new era of computing, or as Nvidia, they're defining it as kind of the next industrial revolution. Okay, I mean, obviously there's a lot going on, and it's across the board. It's across so many industries. You're seeing companies like Dell that are building AI factories on top of NVIDIA technology. You're seeing robotics companies. You're seeing OpenAI that without NVIDIA's technology would not have been able to get to where it is today. And so I think if you think about where we are now with regards to the work NVIDIA is doing, it really feels like we're still at the very beginning of this next industrial revolution, really with NVIDIA's technology powering the next era of computing, the next era of robotics, the next era of software, the next era of data centers, and also the next era of simulation. And certainly NVIDIA's technology is helping NVIDIA also reimagine simulation with its Omniverse platform, but also inspiring all the consumer-related platforms, anywhere from Meta to Google and so on, and Amazon, all of whom are either relying on NVIDIA technology or are developing potential competing products and chips in order to compete with NVIDIA or remove their reliance on NVIDIA, which is currently estimated to have about 80% of the market share for, AI-related chips. So, Apple is making sound that they're going to enter the space as well. And I think all of that is really as part of this broader shift that we're seeing when you and I are talking for a long time now about the next era of the internet. This is all powering the next era of the internet, the next era of computing. And we are really at the beginning of something tremendous, which I don't think it's possible to sit and fully grasp the implication of what it means. So all we can do is in our little corner of the universe or the metaverse, we can just continue and build, continue and experiment, and see what other fellow builders are doing.
Yeah, absolutely. I think when we first launched the podcast in 2021 and we chatted with Rev from Nvidia, he's VP of simulation and Omniverse at Nvidia. He talked about, AI playing the crucial role in the metaverse and having all of these AI powered, let's call them AI NPCs, right? Effectively, right? The ability for, even when you're not actively present on these platforms, there's AI that can simulate your humanness and your likeness on these platforms. So you're always doing something. And I thought that was a great idea. That was 10 years down the road. And as we sit here today, this is 2.5, 3 years later, AI has come so far. And if you look at some of the latest developments from OpenAI, some of what he was describing is so much closer to being reality than I thought it was a couple of years ago. And NVIDIA is, as you said, a large reason for that. And so, even though I don't think it's necessarily like the companies that are building the metaverse platforms that are the consumer layer, the application layer, you're clearly seeing NVIDIA's role as one of the key infrastructure players, not just for the metaverse, but for all of IT infrastructure accelerating. And that's why it's, as I said, arguably the most important company in the world right now. I did a deeper dive podcast on NVIDIA with my friends Joe Kim and Brian Peganoff on our Pixels and Profits on Game Makers, Joe Kim's channel. And like one of the big things that stands out is if you think about, there's like roughly $2 trillion of data center installed capacity, and probably coming into this AI boom, roughly 10% of that was quote unquote accelerated compute. We're moving to a world where it's going to be 50, 60, 70%, if not more of that capacity has to be retrofitted as accelerated compute, powered by GPUs or other specialized chips to handle these advanced workloads. And as you think about this massive investment cycle that has to occur to replace that, NVIDIA is the center of it.
Yeah, definitely. And again, without getting into, our show is really not about trying to project the behavior of the stock. And this is obviously nothing of what we're discussing is financial advice, but just from actual development, production, building things, we are obviously scratching the surface. This is just the beginning of the beginning of the beginning of a new era of the internet. And it's quite overwhelming, certainly for a lot of people, that it's happening all at once and all the time. And it's coming together like an avalanche. And Matthew, you live in Colorado, you know what avalanches mean. So it's like coming like an avalanche of technologies that are new and advanced. And it's not surprising that at the moment, it's really mostly in the context of data centers and the enterprise, right? But these massive infrastructure that is being now deployed and will be deployed over the next 10 years is going to impact the way the internet looks and feels. So AI alongside technologies like 5G and 6G, right, is going to make everything around us and the internet and the physical world come together in a way that has not been imaginable until today.
Yeah, reminds me I have to renew my avalanche safety certification before next ski season. Moving on to our next topic today, wanted to shift gears. This came out a few weeks ago, but we didn't get a chance to talk about it until now. Looking at Unity, who's a company we discussed a lot on this podcast. For those that don't know, Unity has its roots as a game engine company, but obviously we've talked at length about how simulation and engines are extremely important for the metaverse and how we think about the immersive 3D internet. At the end of last year, for lots of reasons, they ousted the former CEO, John Riccitiello. They brought in an interim CEO. His name was Jim Whitehurst. He's former CEO of Red Hat, but he kind of came in as like a mercenary CEO. He was a partner at Silver Lake, which is a PE firm that had backed
a cleaner.
Private company.
He came as a cleaner.
He came in as a cleaner.
He came to yeah, and by the way, he was a board member before he was appointed as a fixer, right? And he's still now the executive chairman.
Right. And so my take at the time is I thought he was going to try to clean it up as best he could, put lipstick on a pig and sell it. But after his 6-month contract ended, there was seemingly no buyers, couldn't find a price, whatever. So they've announced that Matthew Bromberg, who's a former Zynga COO, is coming in to be the new full-time CEO. The market's been less than enthused by this news. And I think it came alongside the company's earnings results as well a couple of days later. But since May 1st, the shares are down. Well, I did this yesterday, 16%. I think the stock was down a little bit more today. And year to date, the shares were down 48% as of yesterday. So, clearly the market has gotten sour on Unity. Fundamentally, it's a challenge story, and they clearly haven't been able to clean things up fast enough and regain market share, especially in the ad tech side. But what do you make of Unity here, Yon, especially with these changes and given how we've discussed how crucial technologies like game engines are to the metaverse?
Yeah, look, I think in my interpretation of reality is that Unity, the Unity cleanup is really in part to go back to the core of what Unity is, which is a game engine, which powers creativity and innovation in primarily interactive experiences. They've expanded to different areas, right? They've expanded to the enterprise and to digital twins, and really looking at additional revenue source that would make the company more than what it used to be. And it seems that with this really cleanup, they're going back to be what they were always, which is a game engine for developers of interactive experiences. And so, I think if anything, this is a good signal for the industry that Unity is going back to enable what it always enabled. And now they have an even more potential because of the expansion of where people are going to create experiences, right? We're in an ever growing mode of VR and XR, and we're only at the beginning of a new device paradigm with mixed reality. So certainly seems like they're making serious efforts there with their collaboration with Vision Pro. Naturally, Vision Pro hasn't sold what people hoped, or actually it sold exactly with what people expected. And so I believe that these steps are going to make Unity, going back to the relevancy they had with developers who can look again at Unity as a reliable game engine. And they have a lot to prove now with all of the things that they've mishandled over the past 2 years.
Yeah, I mean, on that front, like I've heard, not just the missteps in terms of all the M&A they've done and kind of going beyond being an engine company, but I've heard from a lot of game developers like the engine quality has suffered. They haven't improved the technology nearly as fast as someone like Epic has improved Unreal, right? And so, well, Joe Kim has told me this. We said it on a podcast we did about Unity on his channel again. It was, he wanted them to bring in someone that's a really hardcore technologist, someone who can really get in and fix the tech. And obviously, Bromberg is not that guy. He's more of a COO type person. But I'm curious to see what the leadership team he brings in around him now. We already saw, Mark Whitten, who we had on the podcast a few years ago. He was the head of the Create business, right? He left Unity as part of these changes as well. So I'm curious to see
Wonderful
what the
episode.
leadership.
Go listen. What a great episode with Mark.
Yeah, but so I'm curious to see the leadership team that Bromberg brings in now, and what types of who the CTO is. I think is going to be really important, more so than the CEO, honestly, because I think they have a lot of technology that they need to improve and get better at to win back trust from the market and from their customers, and that's going to be a really important hire for them. Cool. And then moving on, I covered this at length last week, so this is really just a chance, as I said, for Yon to share his thoughts and give you guys anything that I might have missed in terms of Roblox's earnings. One of the things I did discuss, was more about how investors perceived the quarter versus opposed to, builders and brands perceived it, in the sense of, management team kind of being put in the doghouse because you give guidance for the first time and then you have to kind of adjust it down. That's never a good look. But I'm curious what your take is on the quarter. Any lingering thoughts now that you've had a few weeks for it to kind of noodle and settle in?
Look, I think you said a lot of smart things, Matthew, last week, and I believe that with Roblox really being misunderstood. I think that's probably the best way of thinking about what is happening. Roblox is most likely being misunderstood with regards to what it is and what it could become. I think we're just living at a time where being a publicly traded company at the moment is not an easy thing if you don't have super profitable and predictable earnings. And Roblox, in its first guidance, has already missed the mark on one guidance that they're giving to the public markets. And that's the one thing that companies like Apple and Google historically have done so well. They always underpromise and overdeliver. So I think that's why you've seen that total backlash, about 20+% share price decrease on their earnings announcement a couple of weeks back. But really, I think it's a reflection. If anything, it reinforces the lack of understanding or the misunderstanding with regards to Roblox from the public markets, and also the lack of patience that I believe investors have with a platform like Roblox. Now, some people might argue that it could well be that Roblox would benefit from actually being a private company versus a public company, given how something like their advertising offering for brands is still very, very, very early and unproven, right? When you look at other social platforms that went public, like Facebook, for example, Facebook went public with already a money-making machine and a very predictable, profitable advertising business that then they kind of took to the next level and really 10x their valuation, right? They went from Facebook IPO'd at 100 billion, and today Meta is around a trillion, right? So it's about 10x, which Roblox really went IPO'd or became public company at a share price of about $68, and now it's 33-ish dollars. So it's more than half below their IPO price, or the share price when they went public. And you know what? If anything, I think it shows how early Roblox is in its journey, even though it's a 17-year-old company. This whole category of what Dave Baszucki calls human co-experience is still very early. We still have a relatively young demographic that inhabits the platform, and it will take time for revenue per user and booking per user and more revenue from international users to come into the platform. I mean, one thing to highlight, 69% of the platform audience comes from outside North America, yet about 2/3 of the platform revenue comes from North American users, right? So international monetization is still shy, still weak, needs to grow. Roblox still needs to prove that it can attract and retain 20, 25 plus year olds. And most importantly, Roblox needs to show that their audience is able to monetize better and more as the platform grows. And that will come from more content, more developers, and so on and so forth. The advertising is just fundamentally early. Their real world commerce integration is at beta with Walmart. And so I think if anything, I would encourage investors to think of Roblox as a platform that is very much at its early stages. And therefore, I'm not surprised that there is this, lack of appetite to take bigger risk on the share price. And I think we are looking as a company, as Super Social, we are looking at the growth of the users, which continues to be consistent. We're now almost at 80 million daily active users. Engagement on the platform continued to be staggering, 2.4 hours a day per user. All of those things are incredibly important when we think about the potential of the platform.
Yeah, absolutely. And I think one of the things that caught investors off guard, and I think you're in a good position to kind of give more color because of how long you've been investing in the platform in terms of, one of the big kind of call outs, it actually wasn't the bookings that fell short of expectations in the quarter. It was actually the engagement hours. At the end of 2023, if you recall, they kind of gave that's those soft targets of 20% DAO growth, 20% hours growth, and 20% bookings growth per year. And engagement fell short, notably in North America. And they blamed it on a bunch of the new features they've rolled out not performing well on low-end devices. And so they have to go back and, fix the tech stack to make these things run more efficiently. Maybe you can give a bit of perspective there in terms of, because I think a lot of investors were shocked to hear them say that low-end devices in North America, because you normally think of North America as a premium device market. But I think, we've seen, I know our colleague Colin likes to say, when you see guys playing a game on an iPhone 6 in your game, and that's in North America, like those devices still exist, especially when you consider hand-me-downs. But curious what you think there.
Yeah, look, I think part of the reason why you're seeing low-end devices in the US is because parents give their kids older phones to access probably Roblox. We know that Roblox is a very heavy used by mobile and tablet users, but I think it is interesting that there are a relatively high number of lower end devices also in North American users. And again, this is just a reflection that still Roblox, with all of the amazing growth of aged up users, is still fundamentally a young people's platform. And therefore, what investors should expect is that in the next few years, Roblox will continue to be a platform primarily used by younger demographics. Even under 18-year-old is a young demographic. People under 18 in any part of the world do not have enormous purchase power. Sure, maybe they can spend a bit more once they cross age 13, but it's not like suddenly they're going to spend $100 on Roblox games and Roblox avatar goods and stuff like that. So that's what needs to be kept in mind, which is why, by the way, investors care so deeply about the advertising business and brand spending on the platform, because fundamentally Roblox is a young platform. But I think there needs to be a management of expectation that things are going to take time. And what's most important is to continue and see the user base is growing, engagement is growing, more people coming into the platform. And most importantly, the developers and creators continue to be excited about creating content for that community.
Absolutely. I 100% agree. And then speaking of brands on the platform, just the last topic we wanted to cover today, it's really going back to a blog post we wrote that came out, recently on our Substack. It's titled, "If You Build It on Roblox, Will They Come?" And this was really inspired by, mostly Netflix, honestly, and the Netflix, experiences that have launched on the platform, but also just our general inquisitiveness to understand really what's working for brands and IP owners on the platform. And what we really discovered is a crucial fact that what we tried to do our best, and there is some, qualitativeness to this, but we tried to separate brand worlds that have core game loops from those that don't. And when we say a core game loop, we just any sort of set of tasks that are necessary to complete to engage with the world, as opposed to having optional mini games that are not necessary. And again, that's kind of a qualitative distinction, but that's how we drew the line. And what we found is that games that do have a core loop perform significantly better for brands than those that don't. And I think that's a really important takeaway for brands. You see 135% higher average daily visits, 46% higher average daily playtime, 439% higher average CCUs, and 217% higher peak CCUs in those games. So all that is to say that you see higher visits per day, higher playtime per day, and more people in your game when you actually make it a game and not just have it a brand marketing world. So to answer the question, no, you can't just build it and expect people to come. And the article goes into more best practices and learnings around UA and marketing, the marketing as you like to call it. But I just thought those stats are really interesting. And it's really, I think I had a lot of brand people kind of reach out to me and be like, that's interesting. Can you tell me more? But Yon, curious what you have to say here about some of those stats and what you've seen in your experience.
Yeah, look, I think at the end of the day, and we work really hard to educate our partners, brands, IP owners, etc., about the fact that when coming into the Roblox platform with such a passionate community of users and the uniqueness of the platform from a user behavior standpoint, it's important to come and build for the community, right? Designing for the community. And I think the challenge that brands fundamentally have is that the important thing for them is how brand comes across, how do they bring the brand in a way that they want to be portrayed. And I think that's totally fine and fair and important to bring the brand in an authentic way for the brand. But it has to be authentic for the brand while also being meaningful for the community. And in the case of the Roblox platform, it's still fundamentally a platform that revolves around game experiences, not just showcases of IP and hanging out. It is a social space, but it's a social space in the sense that the users want to play together and they socialize within the context of playing a game. And that is what fundamentally we see a lot of brands do wrong. Netflix launched a stunning experience. Next World is stunning. It's beautiful. The brand, the IP comes to life so vividly. Great work. But the game loop is broken and it's just not a good, fun game. It's not. That's a fact. And it's not fun for the users. They're not liking it. They don't enjoy playing it. And the fact that it's Netflix with all of the famous IP they brought in only reinforces the importance that they got to nail it right. And therefore, when you look at the Next World, it's like 50-something% approval rate. And when you look at one of the games they launched of One Piece, it's like 30% or 30-something% approval rate. So they obviously haven't done something that the community loves. And that's okay. That happens. I'm curious to see how they're going to fix it, how they're going to turn it around and create something that the community actually appreciates and loves. It's not like Super Social have done things perfectly in our own games and experiences, but that's why we learn the importance of a core loop and making sure that you don't just drop something that is just going to be engaging because it's a brand or it's a social space, but it has to really be meaningful for the players. And what they want to do is play. They're going to socialize and they want to express themselves, but they want to do all of that within the context of playing a game, having fun, and it's got to be engaging.
Absolutely. And I think that also ties into the conversation and some of the parts of the article that I wrote as well in terms of, how brand goals are shifting on Roblox, right? In the beginning, if you go back a couple of years, it was all about marketing activations, eyeballs, awareness, but increasingly brands are more interested in engagement-based metrics, retaining users, and with commerce coming and other real-world connectivity to really make this a business asset, the eyeball vanity metrics is no longer going to be enough. And so having these worlds that people can jump into and figure out what it is and never come back to can be good if your goals is just awareness, right? That's great if you're just after awareness. But if you want to build a deeper, more meaningful connection that's going to have a long-lived connectivity with the potential super fans you want to build on the platform, you need to do something more than just a simple world. It needs to be a game that's engaging, that has a game loop, that has retention built into it. So that way, then you can drive real world value from them down the road.
Hell yes.
And this is a conversation. I was at Licensing Expo in Vegas this week. I know you were at a conference in LA. When I was chatting with brands and IP owners at Licensing Expo, first of all, they're all interested in Roblox in various ways. A lot of them still don't know how to do it. So there's still a huge education gap to fill. But I think a lot of them were also kind of shocked to hear these numbers and we're interested in it. And we're trying to understand, because they're trying to understand the best way to engage based on the budgets they have and what their goals are. And again, as you mentioned, the education gap is still extremely large to fill. And hopefully, as more and more brands are successful, more will be able to learn and take best practices. And that was the point of the article, is to help brands and IP owners really understand best practices to be successful on the platform. Great. And so with that, we're going to wrap up for this week. Thanks everyone for listening, and we'll catch you on the next episode.
Thank you so much for listening to this week's episode of Into the Metaverse. We hope you learned a lot and explored new aspects of the metaverse.